Hello guys, and welcome back to a new video. Today I'm going to show you how you can trade the higher time frame using a very simple strategy, right? So I received a lot of messages of people asking me to do videos about the higher time frame. So you know that all my videos are about the 1 minute time frame and the 15-second time frame. So some people, these lower time frames don't fit their personalities, right? So I wanted to do a trade recap of a trade that I took on gold on the 4-hour time frame using very simple logic. You can basically learn the strategy by just watching this video, right? So I still trade Forex Pro firms, although I focus heavily on futures, but I like the flexibility these Forex Pro firms offer, especially with the payout policy, right? You can request a payout every single day whenever you want. So I really like them. So I still have only one funded account, right? But I trade only the higher time frame in it, right? I get 2, maybe 3 setups per week. And then during New York, I'm trading futures, I'm scalping futures, right? So I found that this is the best way to go with it. Swing trading on Forex Pro firms and scalping on futures since price is fractal, all right? So let's go to gold, all right? And these are the pairs, the instruments that I use in higher time frame. I found them very volatile, all right? Big expansions. We have the Nasdaq, USD/GBY, right? And the gold, and also this one right here. So I took this trade on gold, and it was really beautiful. Everything was aligned, right? And I'm going to show you the steps that you can follow in order to catch these setups also, right? So here's the trade that I took. Here's the position that I took. Yeah, so it was a long position. It wasn't a lot, only 1.5 R. Although the potential was really good on this trade, I could have taken 3, 4, 5 R. All right, so let's go to the higher time frame first. Let's go to the daily time frame. All right, so we need the daily to frame our bias or our direction. Although gold is very obvious, we are trending heavily to the upside. So all you have to do now is to look for sweeps on short-term lows. Okay, so you are basically buying the pullback, and you want the pullback to take something, to sweep something. For example, this one right here, sweep and then trading to the upside. And this one also, another sweep here. These are all sweeps of short-term lows and then the expansion higher, right? There were no sweeps here. No, nothing here. And there was something inside here that we're gonna go through it. I believe it is with this one, all right? So on the daily time frame, what do we have? So here we can see that there is a sweep, right? And then we are also inside this imbalance. Okay, beautifully rejected heavily from it. If we go to the 4-hour time frame, here's the sweep that I was talking about. So basically an uptrend, you are looking for a sweep, okay? And don't look at the sweep here, okay? Don't look at this here or I don't know here. Wait for the pullback to happen. Wait for the pullback and look for a sweep, right? After price stopping into a higher time frame zone or a point of interest. In this case, it is a fair value gap, okay, an imbalance on the daily time frame, and then look for a sweep inside it. So that's the whole model. Sweep inside of a higher time frame point of interest to follow the trend. So here we have the sweep, okay, and now we are trading to the upside. Now we are looking for another sweep. So this was I missed that actually. Okay, really beautiful sweep, but I didn't see it. I wasn't trading gold until this week. I took a look at its chart and it was really clean, so I added to my list right here. USD JPY was also clean. You can see how beautiful it is. Look at this sweep right here. Another sweep was happening here, right? So it was really beautiful, and I strongly recommend you to take a look at it. The higher time frame is really good in here, and it is also easy to read. Let's go back to our subject. So here we have a sweep, and now we are trading to the upside. Now what happened here? Let's go to the 2 hour, I believe. So I'm looking for a failure, right? A swing failure, which is only a wick below the previous low, like this, okay? Now price was trading to the upside and we broke this high. Market structure shifts or market structure break, okay? And we return back into this zone. The order block, I call it an SNDR, whatever you want to call it, I don't care. The most important thing is you understand how price moves, okay? Expansions, pullbacks, sweeps, these kind of things. So here we have this zone, price broke structure, return back into it once. We don't take the trade out here again. We are looking for a sweep to continue the trend. Price started to the upside. We have these lows right here. Low resistance liquidity. We don't FOMO into this move. These two up close candles, we wait for the sweep. Always wait for the sweep. And it happened right here. Okay. And I believe, let's go to yeah, exactly. So as you can see on FXCM, right, FXCM, we have on the 2 hour, we have only wicks, but for some reason on forex.com, we have a break of structure or body closure. So I don't understand why, but I did my analysis on here. Okay, so here we have a really beautiful sweep, and this is exactly what you want, right? And we wait for the break of structure above this candle. So basically this is just a market structure shift, but it is on the candles. And then the other market structure shift on this time frame happened here. So as you can see, guys, simple logic, nothing complicated in here. Just sweeps following the trend, point of interest, that's it. The only thing that's left right now is to take the trade. And do we have a target? Even without a target, we are in a really bullish uptrend, so you can take the trade, but we do have a target right here, which is these lows or these highs right here, right? This is what you want to target. This is what you want to see when you want to take a trade. These low resistance liquidity, okay? And I took the trade from, and let's go to the lower time frames and show you how that looks like. But I took it on the 2 hour. So here's what happened on the lower time frames. Here's our market structure shift, return back. Ideally, I wanted to see some kind of sweep here, right? Maybe to add to my positions, but it didn't happen. But you can see that it happened here. Another sweep to continue the trend, right? Here's another sweep to continue the trend. I hope you can see it. Here's another sweep also to continue the trend. So I was looking at this morning, right? But let's go to forex.com for this. So as you can see, I put my alert here below this low right here. I wanted to see a sweep below them, top into the 50% of this zone from this low, from this high to this low, and then to take the trade. But unfortunately, price swept this, and then the market structure shift happened here with this candle, right? If we go to the 1 minute, I believe we're going to see it. Yeah, so exactly, here we go. The market structure shift on the candles happened earlier, and then it was followed by the structural break right here, return back, and then continue to the upside, and sweeps as always here, another one right here, another one right here. Right, beautiful. Here's another one later on happened. So basically this right here is a higher time frame pullback in order for us to continue the trend, right? So beautiful. Let's go back to the 4 hour to go through the trade one more time. I'll show you what I targeted. Yeah, here you go. On the 4 hour, we have beautiful sweep. Here's that break of structure. Let's go to the 2 hour. So I was targeting this high right here. I believe you can see it on the 1 hour. Yeah, this one right here. I took my trade on here, on this imbalance, right? I thought that price is gonna go pulls back to it. Stop loss here, and I was targeting this for exactly 1.5 R. Okay, and one more thing that I want to discuss before I end this video. When you take a trade on the higher time frame, and you take it, for example, on the 2 hour, right, which is exactly the time frame that I used to take on the 2 hour, right? I used, of course, the imbalance on the 1 hour to take the trade, but my main time frame was a 2 hour, okay, because of this sweep and the break of structure here, right? Now, the tip that I wanted to give you, when you trade on the higher time frame, right, you don't go back or you don't zoom in to manage the trade on the 15 minute. Don't do that, because if we go to the 15 minute, let's remove this. So my entry was here, right? Price was trading to the upside, and then everything was good, and you see now this down move, right? Or maybe when you see this up move, you want to move your stop loss to here, and in this case price didn't take this low, but it can easily take it. The logical thing is, or price is likely to take it here. Price didn't take it. It was one of those a few times, but do not manage your trade on the 15 minute. You take it on the 2 hour, stick on the 2 hour time frame, right? Because you're going to see a lot of internal structure, right, on the 15 minute, and you might want to reduce your stop loss very early. You want to mitigate the loss, put it to break even, right? But remember that you took it on the higher time frame. It will take time to do its target, okay? Because if we go to the 2 hour time frame, we can see that it was only one candle. Price retraced back, tap into this zone, unmitigated zone, and then it traded to the upside. With one candle, it hit the target, right? But if you go to the lower time frame, you will get sick watching price moves up and down, right? So stick with the time frame you entered from. Manage it there, okay? Don't micromanage. So I believe that this is the end of this video. I hope you found it informative, right? And if you have any questions, leave them down in the comments or DM me on my Twitter account, and I will reply to you as soon as I can. Now, happy trading and good luck.